All right, folks, buckle up. We're diving deep into a potential AI earthquake. JPMorgan just dropped a report that's sending shockwaves through the tech world, and it all centers around a name you might not be super familiar with yet, DeepSeek. This isn't just another AI model. It's a potential game changer that's already forcing Wall Street to reevaluate everything. So, what's the big deal, and more importantly, how does it impact your investments? That's what we're unpacking today. Are your AI stocks set to soar, or are they about to take a nosedive? Let's find out. Now, JPMorgan isn't known for making rash predictions. They're usually pretty measured, which makes this report all the more significant. Their analysts believe DeepSeek, with its focus on cost-effectiveness and efficiency, is poised to disrupt the entire AI landscape. Think of it as a democratization of AI, making it accessible to smaller players and startups who previously couldn't afford to play in this space. But this also means increased competition for the big boys. JPMorgan's pinpointing specific winners and losers, and some of their calls are downright surprising. We're talking potential shifts in billions of dollars of investment. So, pay close attention. The core of DeepSeek's impact boils down to one thing: cost. It slashes the financial barrier to entry for AI development and deployment. Imagine the possibilities. Smaller companies can now build sophisticated AI applications without breaking the bank. This means faster innovation, more competition, and ultimately, better products and services for everyone. But here's the kicker. This cost reduction will likely shift investment away from certain areas. Specifically, JPMorgan thinks we'll see less focus on massive CPU infrastructure and more on application development, the inferencing side of things, and specialized training infrastructure. Are you invested in companies building CPUs? You might want to rethink that. So, who are the winners in this new AI world order? JPMorgan highlights companies involved in data infrastructure. Think about it. With more AI applications popping up everywhere, the demand for storing, processing, and managing data is going to explode. Companies like Snowflake, which provide cloud-based data warehousing solutions, are perfectly positioned to benefit. They're like the picks and shovels in the AI gold rush. This is a space to watch closely. Are you already invested in data infrastructure? Let me know in the comments. Another area poised for growth is specialized hardware. We're talking about ASICs, application-specific integrated circuits, and advanced networking silicon. These are chips designed specifically to accelerate AI workloads. They're much more efficient than general-purpose CPUs, which is crucial for handling the massive amounts of data required for AI. Companies that design and manufacture these specialized chips are likely to see a surge in demand. This is where things get really interesting on the tech side. Think about companies like Broadcom, which supplies custom ASICs to major players like Google and Meta. They're in a prime position to capitalize on this trend. We'll talk more about Broadcom's risks later, so stick around. Of course, the cloud computing giants are also expected to benefit. Companies like Amazon, AWS, and Alphabet, Google Cloud, are already providing the infrastructure that powers most AI applications. As AI adoption grows, their cloud businesses will naturally expand. It's a pretty straightforward equation. More AI means more demand for cloud computing. But, and this is a big but, they'll need to adapt to this shift towards more specialized hardware and open-source models. They can't just rely on selling generic compute power anymore. They need to offer tailored AI solutions to stay ahead of the game. And speaking of open source, JPMorgan believes DeepSeek is fueling a broader trend towards open-source AI models. This is huge. Instead of relying on expensive, proprietary models from companies like OpenAI, more and more organizations are going to adopt and contribute to open-source alternatives. This not only lowers costs but also fosters collaboration and innovation. Think of it as the Linux of the AI world. This is a massive shift in the power dynamic, and it's one that investors need to be aware of. Interestingly, JPMorgan sees Meta as a key player in this open-source revolution. They're already heavily invested in developing open-source large language models, LLMs, and they're likely to continue improving them. Furthermore, JPMorgan suggests that Meta could benefit from the need for a U.S. standard for open-source AI that extends globally. This is a fascinating angle. Could Meta become the de facto leader in open-source AI? It's certainly a possibility. Now, for the tough part. Who are the potential losers in this DeepSeek-driven shakeup? JPMorgan singles out companies heavily reliant on selling general-purpose CPUs. The shift towards specialized hardware and open-source models could significantly impact their bottom line. This isn't to say that CPUs are going to disappear entirely, but their dominance in the AI space is definitely being challenged. Companies like Intel, which are already facing stiff competition, need to adapt quickly or risk falling behind. This is a harsh reality, but it's one that investors need to confront. Earlier, I mentioned Broadcom being a potential winner due to their custom ASIC business. But there's a flip side to that coin. JPMorgan points out that Broadcom's reliance on a few key cloud and hyperscale customers, including Google, Meta, and OpenAI, creates a significant customer concentration risk. If any of these major players reduce their demand for Broadcom's products, it could have a major impact on the company's revenue. It's a classic case of putting all your eggs in one basket. While Broadcom is well-positioned for growth, investors need to be aware of this inherent risk. Beyond the stock market, DeepSeek's impact will be felt throughout society. Lower AI costs will accelerate adoption across various industries, leading to increased automation, improved efficiency, and new products and services. This is a good thing overall, but it also raises some serious ethical considerations. We're talking about potential job displacement, the need for responsible AI development, and the risk of bias and discrimination. These are challenges we need to address head-on to ensure that AI benefits everyone, not just a select few. And let's not forget the geopolitical angle. DeepSeek's development in China highlights the growing competition between the US and China in the AI space. This isn't just about technology. It's about economic power, national security, and global influence. The race to dominate AI is on, and the stakes are incredibly high. This is something governments and businesses around the world need to be paying close attention to. So, what's the takeaway for investors? First, recognize that the AI landscape is constantly evolving. What's true today might not be true tomorrow. Second, diversify your AI investments. Don't put all your eggs in one basket. Consider investing in companies across the entire AI ecosystem, from data infrastructure to specialized hardware to application development. Third, pay attention to the ethical considerations. Support companies that are committed to responsible AI development. And finally, stay informed. Keep up with the latest news and trends in the AI space so you can make informed investment decisions. Let's be real, there are risks involved in any investment, and AI is no exception. JPMorgan's report highlights several key risks, including rapid technological change, investment uncertainty, and the potential for commoditization of AI. To mitigate these risks, it's crucial to do your own research, understand the underlying technologies, and diversify your portfolio. Remember, investing in AI is a long-term game. Don't panic sell at the first sign of trouble. Stay patient, stay informed, and stay focused on the long-term potential of this transformative technology. DeepSeek's arrival is a wake-up call. It's a reminder that the AI revolution is happening right now, and it's happening faster than many people realize. While there are certainly risks involved, the potential rewards are enormous. By understanding the trends, identifying the winners and losers, and mitigating the risks, you can position yourself to profit from this transformative technology. So, what are your thoughts on DeepSeek and its impact on the AI market? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the latest tech trends. Thanks for watching.